Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York. It's Wednesday, 8th day of July, 2015, and this is the daily report for gold and silver and a combined trending markets today. I will be combining both programs or both services today, so subscribers of the gold forecast get a better idea of trending markets. First, to gold. We do have gold trading higher today, roughly trading at 11.59 right now. Our current print is 11.5885. It's actively trading now that the New York COMEX has closed for the day and all trading has moved over to the spot market. Of course, that will close in a little bit, their lunchtime break. As it sits right now, call it 11.59. In terms of the low, 11.4744. The high, 11.6471. One thing that we can say, if we first look at our weekly chart, let's go ahead and pull that up. What we can see is over these last 3 weeks, we've definitely had a decline in price. We've not hit any kind of a tentative bottom. I'm going to be real cautious in predicting that, but the one thing that we can see is when we just look at this line that I've put in, roughly at 11.58, we can see that the market has moved off of these lows on one occasion here and the second occasion here, this being throughout really October and all of this year. This is the first time that we've actually reached this in the second half of the year. Of course, we did have this happen at the beginning of the year. As it came up, we absolutely had our resistance. We've been trading in this defined trading range. So really, traders, when we take a look at it in that light, before we actually can say anything definitive about this market, we would need to really see it break below 11.58. That's our current level of support, as we talked about, and then our current level of resistance comes in at 1200 and 1220. That has been the predominant range, really, if we take a look since this fall of that began really at beginning of 2015 when the market was trading at 1320 till it hit these lows. From that point forward, we have been absolutely range bound. Again, this is a longer term weekly chart, but nonetheless, we have been trapped within this range for the better part of this year. So traders, when we take a look at gold pricing from the glasses, so to speak, of a very, very short-term Elliott wave count, what we have is as follows. First of all, obviously a bear count. We completed 3. This is a 4-hour Japanese average chart. We go into 4. Of course, 4 is composed of our A, our B, and our C. We then go into a 5 count. 1, 2, 3, 4, and 5. So we're at 5 out of 5 on our short-term studies, and that really should conclude at this point our sell-off short-term, because what we would probably go into is some sort of an ABC again. As we look at this market, we've completed 4, so completed 5, so an A, a B, and some sort of C. Now, all things being equal, we would then return to our 5 count. We'll have to see how this pans out, but I can tell you this, traders, this market has not moved to the upside when normal fundamentals would dictate that it could or should, and has been a very, very tough read at best. So traders, as far as silver goes, if you recall, our downside target that we thought silver could hit was anywhere between 15.10 in that area. We certainly got that. Market is still below 15.10, actually trading roughly at 15.06 on the day, but that really puts it up about 9 cents. It has dipped below the $15 mark. So we did get some tremendous selling coming into the market. Now, this chart hasn't updated quite well. You can see it's at 15.16, but nonetheless, market's trading at 15.06. We still have this nice move up. The key is whether or not we're going to see any follow-through. Minutes were released from the most recent FOMC meeting, and they were construed as more dovish than originally believed to be. So traders, I'm putting up our original projection chart, and basically the projection from this to project this wave 5 right here, simply what I did was I said that wave 1 and wave 5 are typically equal. That was absolutely not the case on this move. You can see these lows that came in here. So our basic target, which was on this one, 1516, was genuinely taken out and taken out with a vengeance. However, when we do look at our particular count, it does seem as though we have now concluded this area, and our system now is looking for a spike back up anywhere between, call it 1570 and about 1620 or 30 on the top side. So we might take a stab at silver over the next couple of days. It's definitely been oversold. Next market I do want to look at is crude oil. We talked last week about how I thought oil would come under pressure this week. We've certainly seen that. We saw a dynamic move lower. We saw that move lower just a couple of days ago. Today, off about 1%, down about 51 cents per barrel, trading at 51.82. I believe in terms of where we could see this market go, it is lower. But in terms of our anticipation, again, this is just basic Elliott wave modeling, anywhere between 50 and 75%. And that would be the area that we would look at for this low to fall in, right in this area. Now, we have actually breached this area, and the question is, are we going to see it go to the lower end right in here and then begin to move up, or will we see it find some sort of support at this 50% retracement level? Now, in terms of the currencies, we do have the dollar lower on the day, the euro higher on the day, opposite of what we saw yesterday. I still believe that in the long run, in the big picture of it, so to speak, we will see this dollar move higher. We will see the euro go lower. A dollar currently trading 96.23, off 32 points. Our recommendation on our current dollar trade is to maintain our long position, maintain our current stop. Euro dollar also up now at 110.75. We're short at 111.65, I believe. So we still have profits in that trade. I'm going to look to maybe lower that stop today. If I do, I'll send that out as a special trade alert. For right now, I do recommend that we maintain our current short position in the euro, maintain our current stop in the euro. S&P, of course, we did have an issue with the exchange, New York Stock Exchange today, in which they went down for about 3 hours. This happening at the same time that United Airlines went down. But they are saying it was a glitch in the system. But we do have it closing dramatically lower, off about 1.69%, 2039, off about 35 points on the day. When we look at the Dow Jones Industrial Average, traded and closed near the lows, off 261 points at 17,515. Now, we're currently flat. We are not actively trading the S&Ps. My sense is that I want to see the market react either by breaking well above and closing above these most recent historical highs, or breaking below a 200-day moving average, which is what many traders look at in terms of long-term moves in the market. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.